Working with Juliana Lee Team was a great experience. They have fantastic negotiation skills.
And we are really happy to be working with her.
They laid everything out for us so that we didn't have to wonder what our next steps were.
Get an all-cash offer within 9 days.
I recommend
wanna
Juliana.
Hey everyone, today we're taking a closer look at market trends across the peninsula in Silicon Valley.
Specifically, we want to look at a few cities right below San Francisco, like Brisbane, South San Francisco, and Daly City, and look at why they seem to be falling behind.
If you've been watching the data, you'll notice these areas are staying pretty flat, while cities further south, like Santa Clara or Palo Alto, have been picking up momentum.
It's a bit of a shift. If you remember back in 2024, cities like Cupertino, Saratoga, and Monte Sereno, even parts of Los Gatos, were outpacing much of the Silicon Valley trends.
Exactly. At the time, Cupertino looked like it was pulling ahead, but now things have rebalanced. Santa Clara, Mountain View, and Palo Alto are all seeing growth.
Now let's look at some graph. The top line here is Palo Alto single-family homes. You see how it has strong post-recession recovery after 2008, and then went flat and is now trending upward again.
Now, if we shift focus to the Daly City, Brisbane, and South San Francisco area, the trend looks very different. These areas aren't just flat. In some cases, they're still trending down from their peak.
And this is just for single-family homes. What is surprising is that even when we compare condos, like Daly City condos versus Daly City homes, the price trends are still almost identical. It's still kind of flat.
Compare that to Mountain View or Santa Clara. Mountain View has been flat for a while, but maybe hinting at a downward trend. Meanwhile, Santa Clara is showing a slight upward push, which aligns more closely with the broader Silicon Valley pattern.
And just to clarify, in those graphics, houses are on top, condos on the bottom. In Santa Clara's case, houses are adding up, but condos are still pretty stagnant.
And you expect lower price markets to stall if affordability were the issue. But take Newark, for example. Homes there are cheaper, but we are seeing actual growth.
That raises a big question. Is this a condo-specific issue? It could be a perception shift, maybe fallout from the Florida condo collapse, rising insurance rates, or just buyer sentiment.
When you look at housing as a long-term investment, Silicon Valley homes have appreciated by roughly 6.5% annually over the past 30 years.
Which means yes, they are way more expensive now, but that's the nature of compounding growth. Despite the ups and downs, real estate here has consistently trended upward long-term.
So while some areas bounce back faster than others, history tells us they often converge over time.
The one exception we are seeing right now, cities just south of San Francisco like Daly City and Brisbane are still lagging behind with no clear sign of recovery.
Well, that's our update for today. If you're thinking about making a move, let's talk about what this means for our area and strategy. Thanks for watching.